Hey, what's good, everybody? Welcome to the Closing Beat. Happy Tuesday. Hope you're having a good day here. Sorry I'm a little late. The thing won't share my screen for whatever reason, so we won't have that today. But let's talk about the stock markets because we're financial advisors and we look at the markets every day for our customers. We actually manage our own portfolios, and so we're always keeping an eye on everything, whatever we can adjust, make better, or improve to not only help our customers' investments, but also with their net worth. We're really focused on that as well, teaching along the way. Well, day after tax day, did you wake up today and go, holy cow, I forgot to do my taxes? I hope not. Anyways, you got the markets a little bit higher on the day. We continue this kind of melt up. Overnight, there was some news on out of China. So Shanghai had a great evening, well, would have been their day, our nighttime sort of rally, over 2% there in Shanghai. Our customers actually know why, right? In the last two portfolio updates that I've done, we actually covered China to kind of show why this bull market in China had just be getting started, going back to February when we started talking about it. Very important, right? You should know what's going on over there, and do we expect more or less? They have the data now. So if you're one of our customers, you just joined us, go in the dojo, look at the last two portfolio updates, put together some cool slides for you. You can check that out. Stock market wise, we continue this melt up. That's what they call it. They call it a melt up because basically you have a market that's just going higher with slowly, like lava would flow down a mountain or a volcano, but it's going up instead. It's like a slow creep. The problem with that is they say when there's a melt up, there's always a burn down, meaning the markets melt up and then they fall really rapidly, typically because it catches everybody off guard, right? People don't know what to expect. All of a sudden everything's fine, then the markets fall. They go, what do I do? And they sell. So you tend to see that sort of thing. Now, we really saw some weakness today, in my opinion, start to show up across the board. Look at real estate today. Rates weren't up that much, and REITs actually pulled back pretty sharply. You got up over 2% today. But nonetheless, it finished the day positive. The S&P basically finished flat on the day. Not really a whole lot in terms of excitement to go by there, and even almost closed negative on the day. So kind of a non-event for the S&P 500. Small gains across the board, as you can see. Earnings. So earnings season continues to be underway here, and most companies are blowing away analyst estimates. Meaning the analysts analysts got together, they have an average estimate of 50 cents, and companies are reporting 70, 80, 90 cents. Beating estimates by a lot. Wide margin on estimates there. And we've already talked about this leading up to this earnings season. Analysts had lowered their expectations so much that people aren't impressed if you can beat these new lowered expectations, which almost every company is. There were 10 names that reported earnings today, and 9 of them beat on earnings there. So incredible beat. However, we're all not that impressed because we know you lowered the bar so low, right? Big deal. So we're now looking for guidance. I've been mentioning that this earnings season guidance would be a big one there, and so far that's proving true, as you can see by Netflix there in the background. Okay. Hey, the markets are closed Friday. It's Good Friday, and half a day on Thursday if you're paying attention there. So we won't do any closing beat on Thursday or Friday. There's really not much to do there. Tomorrow we've got earnings from Morgan Stanley, U.S. Bank, casino operator Las Vegas Sands, was it? Yeah, Las Vegas Sands reports tomorrow. And Pepsi, by the way, if you're interested in earnings from Pepsi. Sector-wise, here you go. You got semiconductors breaking the new highs today. If you're one of our customers, I'm going to have to ask you to follow along in the dojo. Sorry, still can't share my screen. It just won't connect and is giving me no reason why. Semiconductors hitting new highs today. Already was a great start to the day. The China movement overnight was great. Trade talks are supposedly wrapping up. And then right in the middle of later in the day, you got the announcement that Qualcomm was done. The lawsuit between Qualcomm and Apple was over. Qualcomm blasted off. And if you look it up, Qualcomm gained 23% all on the day. But they make up about 5% of the semiconductors. I'm using SMH to check that out if you want to take a look. And so really good day for semiconductors there. Now up over 30% on the year. Tech. If you look up the XLK, you got tech sitting at new highs as well. They also had a good day last week. This one made new all-time highs there, so looking good. Bank stocks in general, not bad. There's 1.5%. Well, basically 1.5%. Moving out of that range we've been talking about, going back and forth there. the banks still will have control, right? We talked about earnings from the banks, U.S. Bank and Morgan Stanley tomorrow. So really not a bad little move here for financials. And what do we need in order to get the market to new highs? Financials. They really haven't participated in a meaningful way. So it's really sort of exciting if you're following along looking at the financials here. Wells Fargo is really the only one that's been beaten to death. Got a little bit of a rally today. But 4 downgrades yesterday. 4 different analysts downgraded the stock. Anyways, moving on to REITs. I mentioned that a second ago. You can use anything, ICF, FREL, just however you want to look at it. They're all a little different. 2.5% down day for REITs. You got interest rates moving higher, but also you have REITs that just overextended. This is a great example, by the way. I wish I could share it with you on this stinking screen. Great example of melt up, burn down. REITs had just been melting higher and higher, meaning really slow, tiny little gains and tiny little losses, just little blips on the screen, almost non-eventful, just boring, and all of a sudden, bam, it falls. Why was that? Well, it didn't do it all in one shot. It fell a little bit today, and you start catching people off guard. Everybody that was been piling into REITs going, well, wait, did I miss something? Or is the sector going bad? You got melt up, burn down. So that's your sort of phrase of the day if you're following along there. Healthcare, I'll use XLV to take a look at that. That looks like the stuff that comes out of the south end of a northbound facing donkey. Does that paint a picture for you? So not good, right? Healthcare not looking good. It lost another 2% today. UNH reported earnings, by the way, not bad. It started off strong and then fell right with the sector. Just a horrible day. UNH lost 4%. The XLV is the ETF that I used for that. Look, I don't care if you like Bernie Sanders and you're going to vote for him, and I don't pay much attention at the moment. I don't know what he's saying, right? Maybe you like him and you want to vote for him. I can tell you right now, Wall Street thinks that he has a good chance of getting elected and he will demolish healthcare. So you own healthcare stocks. If you want to vote for Bernie Sanders and you think he's going to do really well, I mean, he did pretty good last time. If you think he's doing well and you're going to support that guy, I'm just giving you the heads up. You may not want to own any healthcare stocks, and you may want to take a look at some of the other stuff he's talking about, because all of this he essentially wants to disappear. All of healthcare gone, right? And so Wall Street believes this right now, that the whole Medicare for all, they're buying it. So you have people making huge shifts going, look, I don't care. Last time Bernie Sanders got a lot of traction. If he even gets some traction this time, I don't want to be invested in it. That's what Wall Street's saying. And so you have massive amounts of money shifting out of the healthcare sector. That's the XLV. Look at the volume on that, just piling out of it, moving money and maybe moving it into financials. All right, individual stocks. Bank of America reported earnings today. Earnings better than expected. They beat by over 5 cents. That's a wide beat for them. Doesn't sound like a lot, but that's a wide beat. They continue their streak. They haven't missed on earnings since the first quarter of 2015. So Bank of America looking pretty good. They did miss on revenue just a little bit. So remember, earnings, everybody's beating expectations, not bad, but revenue was just a little miss, not great. BlackRock, higher by 3% today. I think this is the world's largest asset management company. I believe they're world's largest now. Anyways, so BlackRock higher by 3%, beat earnings by 48 cents. Like, how wrong were analysts that BlackRock beat their expectations by 48 freaking cents? That's impressive, right? So it just shows analysts have, lowered the bar so low that it's easy to beat. United Healthcare, we talked about already. They beat on earnings by 13 cents, way better than expected. Optum Health, that came up. Optum Health, they just kept mentioning that. A lot of subscribers being added there. That's doing well for them. They have forward-looking guidance they issued positively, which they don't always do. The last 2 earnings cycles, they didn't actually give any guidance at all. So not only did they beat on earnings, revenue was basically in line, or it was a little bit better than expected, but they also guided positively forward. That's good. That doesn't normally happen. So the stock did start higher, but good old Bernie Sanders and get rid of healthcare and let the government take care of it help push everything down. Netflix did close higher by 3% today. It is lower, just touch after hours. They said they had guided that they would add 8.9 million worldwide subscribers. They added 9.6, so they beat their own guidance. Isn't that clever? If you can tell Wall Street what you will do and then do better than that. Doesn't that seem like a little game going on there? Anyways, they beat on revenue. However, going for the second quarter, they guided that we're only going to add 5 million subscribers total worldwide. Analysts had expected 5.5. What did Netflix just do? They just lowered the bar themselves. They just forced Wall Street to lower the bar so that they can beat. You know, Netflix basically beats every time. I think it's 91% of the time they beat on earnings. It's because they know how to play the game. Analysts won't fall for that one, although they do have to adjust. That's what Netflix does, right? And they actually had some comments about Disney and everything, saying they're not really worried, bring on the good fight. They raised the prices, by the way, and they're noticing they have a very clever way of saying we raise prices, and not everybody's comfortable with those prices just yet. So they called it a little bit of turnover and attrition. We'll see. They guided a little bit lower on earnings, by the way, if that helps you. IBM missed on earnings. They're lower after hours. Johnson & Johnson, I'm getting ahead of myself. Johnson & Johnson's beat on earnings, beat on revenue. They guided positively going forward. That's like third time's a charm sort of thing. All three metrics were really well. They had strong sales of their cancer, Crohn's disease, and psoriasis, spelt with a P. My wife would be happy I got that one right. And strong sales of those medications doing well. There you go. So Goldman Sachs laying off 98 people in New York. I don't really have much more specific about that. Boeing says that that was a late day pop, by the way, in the Dow. If you look at the Dow moving along, bam, little pop there in kind of the middle afternoon. There's software testing for the issues they're trying to solve there. Said the software testing has operationally suitable. It is operationally suitable for now. Okay. So more positive news there. Looks like maybe we can get those planes back in the air. Walmart, just a touch higher today. They're partnering with KidBox to offer fashion clothing boxes for 5 items for $48. Pretty positive guy. Read about that. I just don't think that's a good idea. I don't see that. Why? I don't understand why they're doing that. Why is it even on the little list here for me today? Weird one. Anyways, that's all I have for you. If you have any questions, I'm trying to, I'll try to help you with what sort of limited resources I have today. Bernie might be ahead now, but there will be blood in the streets when the primary comes. Hey, to me, you have your views. I have my views. This is I don't really care. Like right now, that I don't host a political channel. The bottom line is, what does Wall Street think? And Wall Street does not want Bernie Sanders as the president. And remember, that's your money. So I'll keep pointing it out, but realistically, doesn't matter to me. Cool. Was it Aurora? They bought somebody. So pot stock there, Aurora Cannabis, higher by 4 1/3%. I just briefly saw the headline. They bought somebody. Sorry, I don't really follow that. I just watch them when something pops. Tilray came off its lows a little bit. That's still looking pretty sloppy. Lady says, what do you think about QCOM? Well, that's the that bounce today, that 23%. That's because they're not fighting with Apple anymore. They agreed to get along, settle their disputes, and move their separate ways. You can see how much that was holding Qualcomm back, obviously, and what side of people were surely taking. Definitely helps. I don't like chasing stocks when they have such a huge move like that, but certainly seems like good things to come for Qualcomm now that they can put that behind them, and the costs and everything associated with it. Yep. God, I wish I could share this screen with you there. Charlie says, regional banks, another 180 today. Yeah, very good start there. You can see right there between, how do I show you? What day is that? Oh, I can see on the little chart. Between beginning of April and now, that sort of back and forth. You see how there's really no progress? We can look at it now and say, yeah, basically it's up. But day by day, if you owned it and you saw that, you'd be like, yay, right? So that's that congestion. That's all that overhead resistance. Not from my opinion. That's people that go, okay, I'm a trend line player. I'm a moving average player. I'm a Fibonacci player. I believe in the 200 moving average. I believe in price retracements. I believe in V bottoms and percentages gains off of that. All these strategies have come together in the same spot, and almost every one of them says this is a troublesome area. So I think it's pretty impressive how regional banks have sort of pushed right through it. Saad says he needs stock prices to go lower. Can't buy with these prices. I would like a pullback myself. I don't know when it comes, but yeah, I would like that. Investment future finances. You saying I skipped over your comments, huh? I don't see anything other than what's up, JW team. What's up with you? It's not really a question. Oh, comments. Yeah, if you like blood, healthcare, right? Financial investor. Healthcare just, man, especially some of the stocks in that category. It's like every day you look at 52-week lows. There's a few of them in there. Where does the SPY head from here? I'm not allowed to really kind of give that advice, but it sure seems like they want to tag the new highs or at least push to new highs. If you're an all-in total return investor, you already hit new highs, so you're celebrating ahead of everybody else anyways. But if you're a S&P 500 index, just depending on what you're using, almost there. Looked like today was going to be the day, but saw a little weakness there. So you're really getting the hint that, hey, if we pulled back here and had some sharp pullback days, you got to see that coming, right? I mean, that has to be a welcome move. Yep. Yeah, I'll try to get to the questions there. What's the best app for tracking your investments? I'm not sure. What, you mean just like looking at the markets, or do you mean like tracking your actual investments? If you're trying to track your investments, you should use wherever your investments are at. I'm sure they have something. If it's like Fidelity, then they have their own app or whatever. Yep. Do an @Jazz Wealth and ask if Apple has more upside after. Apple. Now you want to short XLV? Nice. Boeing news too. Dustin forgot that. No, I didn't cover that. Dustin, you think the rest of the banks will bring support to WFC? They have so far. The last 2 days have been okay, Jacob, as far as Wells Fargo. Now, mid to long term, does it come back? I mean, you got a stock that's in an aggressive downtrend. Go look. I wish I could show you. Look at the moves lower and the volume. So you're fighting that volume on the way up, meaning you're fighting people that want to bet on this thing moving lower every time it tries to move higher. So it's going to be an uphill battle, for lack of a better saying there. Shouldn't the lights behind me be green? They should. Just a touch green, but consider that a warning, right? If you really look at the market, top-down analysis from the markets today, bit of a warning sign today, although I'm not telling you what to do with your money. I'm just saying, bit of a warning sign. All right, are we planning a Jazz Wealth app? The Dojo works really well, actually, on mobile. You could set it as an icon on your mobile. It's not technically an app, but it works really well. I use it on my phone all the time, just looking at charts and stuff, and that is a work in progress, right? Wanting to add a lot to that. So more to come. That's all I have to say. Financial Investor says, Wells Fargo's on its own, man. They got to defend themselves. They got to work their nonsense out. They got a lot of work to do. I'll give you that one for sure. Dustin, are there any good free stock chart websites that show resistance lines? You should be able to draw them on any stock chart. I mean, unless it's like Yahoo or something, I don't think they do it. But any stock chart that you have at wherever you guys are at, Fidelity, Schwab, Vanguard, whatever you have, pull up those charts and you can draw lines. If you're one of our customers, go into the dojo and you could draw as many lines as you like. If you're asking for like automated lines, then typically you have to kind of preset those. I can't think of it. I'm thinking a Trade Station back in the day. They used to do that. But you should be able to draw whatever lines you like on any chart. That's just kind of a basic feature. Yep. Cool. All right. What do we think about Square? So Square, all waiting for earnings, right? You notice how there's some stocks they fade away and nobody talks about them. The stock is moving like perfectly sideways here. I would expect nothing to happen, barring any major broad market sell-off or broad market rally, until earnings. Simple as that. Everybody is clearly waiting for earnings. It's very quiet, low volume, and that's it. Mike says you can draw on the Yahoo Finance charts. Oh, perfect. Yeah, really any chart. Whatever you like looking at the best is all good. Is Apple going to push higher after earnings or no? 50-50 shot, to be honest with you. Just a pure guess there. I have no idea. I'm not going to venture a guess. I would say that if you are someone who's considering getting long or recently got long since the December low, anywhere in there, you'd be okay if it pulled back a little bit, wouldn't you? I mean, it's basically been a straight line all the way up. It's starting to perform with the rest of the markets. I think you'd be okay if it did fall a little bit. If it happens to rally, the issue is above that, 220, 210, 220 area. If it happens to push up into that area or gap into that area, you're just going to have a lot of sellers there anyway. So in my opinion, if you're more of a long-term holder, you kind of hope for a non-event. If you own it in the short term and you're a trader, if it happens to go up to that 220, I think you join everybody else that would likely sell there. And if it fell a little bit, I don't think it'd be too much of a reason to panic. Yeah. Yeah, I saw the Sprint T-Mobile merger thing running into a little resistance. I mean, how could we have not seen that coming, right? Jeez. Anyways, all right, I'm going to wrap it up there, man. I'm done for the day. I'll try to figure out what's going on with this thing. I'm sorry about that. I usually share charts. If you're watching us for the first time, we'll try this again tomorrow. Usually you could see our charts in there. If I helped you in some way, maybe you'll hit the subscribe button. I'm going to ask you every day anyways. Yeah, enjoy. We'll be back tomorrow. See you.